Hey everybody, VCM here. Today coming at you guys with a quick market analysis and outlook video for the later half of 2021 and going into 2022 for the general stock market and specifically the S&P 500 index or SPY. Now, before I start, I want to preface by saying that nothing in this video is financial advice or should be construed in that way, and any investment decisions that you choose to make are of your own volition. Now that that part's over, we have just a quick overview, but I wanted to provide a TLDR first, or just a quick summary, so that those of you who are especially newer to investing or trading can just kind of hear what the point is instead of hearing all the random jargon. So basically, guys, what's happening right now is we have the basic general market here on SPY. You can see it's sold off a little bit, and just because of a bunch of different factors, which I'm going to discuss in the video, but namely being, hey, stimulus is running out now. We have continued higher valuations, actually double what our stock valuations at the COVID crash bottom were. And, just going over the next couple months, October and September have never been favorable for the stock market, really, and we've seen a lot of crashes and corrections happen in the past. That said, I don't want to be creating some kind of doomsday scenario. We definitely could continue to melt up to like the 460 level here on SPY, but this trend line that I drew is it's pointing towards a retest of kind of the 440 level or so. So just be careful about that. Personally, I'm going to be not pulling out of the market or anything, but just kind of hedging my portfolio and hope that you guys can do the best for yourselves, and hopefully we will all be all good. All right, now that that's over, just wanted to get into a quick overview of what's happened the past year and a half. Obviously, that crazy COVID crash during March 2020, we ended our that crash at roughly D220 to a little bit lower, like maybe even 212 at one point. And since then have doubled our valuations, as I said. Now, I drew this trend line back here during mid 2020 as I saw just a overall bullish uptrend happening, and it's held pretty much true for the most part. And we can see that using the concept of reversion to the mean, we've had instances where the price gets extended too far below the trend line or too far above on the top, and it'll revert back to the mean or the center of the channel here. You can see here that the price kind of stood above the mean or the channel for quite an extended amount of time. This was almost like a month or so, but at the same time we saw this MACD indicator down here had a bearish crossover, meaning that we saw some selling incoming, and eventually we did sell off here and correct. Now, that doesn't mean MACD is perfect or some kind of magic 8-ball by any means. A lot of times it is unreliable, but it can help when paired with different analysis. So that's all hindsight, though. Let's see what's happening right now. So the last 5 or 6 trading days, we did have a slow decline here, and paired with the on-balance volume indicator here, which essentially is net buys and sells, we can see that there has been just a slow decline, but a sharper drop in the on-balance volume paired with just this bigger sell-off on Friday of this last week. What does that tell me? That tells me that bigger institutions and just bigger players in the market have been kind of selling off a little bit of their positions, and they're getting ready to buy back in at a lower price or even at a much lower price, because depending on a myriad of factors, we have the Federal Reserve year that just ended. We have increasing amounts of inflation. I think CPI is roughly 7% now. I don't know if you have been tracking your grocery bills, but even just less than a year ago, I think groceries were in a lot of cases valued at literally less than half of what we're paying now. So pretty crazy. That's just one metric to look at, but that and real estate value just being insanely high right now, as well as unemployment benefits ending across the entire United States. So for me, short-term price target of 441, and looking into the future, we could melt up to around 460, but just because this trend line hasn't been broken yet does not mean it's not going to. I feel that especially October may be a fairly reasonable time to see that us actually extend below this trend line and go into more of a bearish stage in the market. Hence, I'm not pulling out of the market, but I am hedging via favorable risk to reward just buy puts on a recurring basis here and there. It's a small cost to pay in my mind for just a little bit of insurance. That said, we will likely see just that 441 test at the very least. Going into 2022, I'm fairly bullish, however, as we see a market recovery and GDP's expected to recover at that point. Again, nothing in the video is financial advice, but that's just my opinion. However, we could see as much as a 25 to 40% correction in the next 2 months. Now, that said, we don't ever really know what the market's going to do. That's just a quick opinion. Hope you guys can keep growing your portfolios and just have a great day.